Assalamualaikum warahmatullahi wabarakatuh. We are from Group 3. We want to present our papers. First, let us introduce ourselves. First, my name is Jilwanto Marzal. And the next one is my friend Balqis Amalia. And then Revina, Aulia, Maharani. Share screen mana? The first one will be presented by me. So we got winter company balance sheet here. This say they have cash on credit $30,100 and accounts receivable on debit $19,780, and then allowance for doubtful debt $800, inventory $9,500. So the total asset from winter company in December 31, 2020 is 41,480. And then we got the liabilities, account payable $8,750, and then our capital $32,730. And then we added the liabilities and our capital, so we got the liabilities and equity is $41,480. And then during January 2017, the following transaction occurred. Winter used the perpetual inventory method. For the 1st January. Sorry. Let me read the instruction first. You may want to set up the account to determine ending balance. The first instruction is 1. Prepare journal entries for the transaction listed above and adjusted entries, including entries for cost of goods sold using the PayPal system. Okay, I'm gonna present the journal. The first January we got winter accepted per month 8% note from Miranda Company in payment of Miranda $1,200 account. So the journal is not receivable in debit $1,200, and then account receivable Miranda Company $1,200 in credit. And then in 3rd January, Winter brought off as uncollectible the account of inward compression $450 and goes to company $280. So the journal for that is allowance for doubtful account in debit $730, accounts payable inward compression credit $450, and then accounts payable goes to company credit $280. Next, in 8 January, Winter purchased 17,200 of inventory on account. So the journal is inventory in debit $17,200, and then account payable on credit because we buy it on account $17,200 in credit for account payable. So next, the 11th January, Winter sold for $28,000 on account inventory that costs $19,600. Okay, first the journal for our sales is accounts payable and debit because we sell it on account. So accounts payable on debit for $28,000, and then in the credit is sales revenue for $28,000 also. And then because we use the perpetual method, we must write off the cost of goods sold. So the journal for cost of goods sold is cost of goods sold and debit for $19,600, and then inventory in credit $19,600. Okay, on 15 January, Winter sold inventory that cost $700 to Lauber for $1,000. Lauber charged this amount of its Visa First Bank card. The service fee charged Winter by First Bank is 3%. So we must count the service charge fee, the 3% from $1,000. So the result is $30. So the journal for this is cash in debit for $970, and then service charge fee for $30. And then in the credit we got sales revenue for $1,000. And then because we use perpetual method, we must write off the cost of goods sold in the journal. So the journal for cost of goods sold is cost of goods sold in debit $700 and inventory in credit $700. Okay, next, in 17 January, Winter collected $22,900 from customer on account. So he collected the cash from the customer account. So the journal would be cash in debit for $22,900 and accounts payable in credit $22,900 in credit. Okay, next in 21 January, Winter paid $14,300 on account payable. So the journal is account payable in debit because he paid off his debt. So his debt is more or less now. So account payable in debit $14,300, and then cash in credit $14,300 in credit. Okay, next in 24 January, Winter received payment in full $280 from Dosen company on the account written off on January 3. So before this, the Dosen company account is already written off. So to reverse this write-off, the journal is first we must journal the accounts receivable in debit $280, and then allowance for the full account in credit $280, and then we journal the cash for $280, and then accounts payable for $280. Okay, the next one is 27 January. Winter purchased supplies for $1,004 cash. So we buy supplies in cash. So the journal is supplies in debit $1,400, and then cash in credit $1,400. So the last one is 31 January. Winter paid other operating expense for $3,780. So the journal for that is other operating expense in debit $3,718, and then cash in credit $3,718 in credit. Okay, we move on to adjustment data. In this adjustment data, we got first interest is recorded for the month on the note from January 1. So our note from January 1 is $1,200. We got his percentage for 8%, and we must find out for the percentage for the 1 month. So we must count it $1,200 multiplied by 8%, and then multiplied by 1 per 12, and then we get the result is $8. So the journal is interest receivable in debit $8, and then interest revenue in credit $8. Okay, we move on to the second one. Bad debt expense. Bad debt are expected to be 6% of the January 31 account receivable. So 6% from our account receivable. Our account receivable for this month is $22,950, and then 6% of that is like $1,377. So and then we minus it with 800 minus $730 plus $280. So that is $350, and then $1,377 minus $350, we got $1,027. So the journal is bad debt expense in debit $1,027, and then allowance for the full account in credit for $1,027. Next, the third one, account of supplies on January 31 revealed that 560 remain unused. So the expense of supplies in this month is 840 because the remaining supplies is 560. We must minus it with our first supplies. Our first supplies amount is $1,400, and the minus it with the remaining supplies is $560. So we got the result of $840 in surplus expense debit, and then supplies in credit for $840. Okay, after we finish this journal, we gonna post it on the ledger. So as you can see here, in the red section, we got the fee mark. This fee mark means it's already posted on the ledger. So the next one is about trial balance after adjustment, will be presented by Vina. Vina, time is yours.
Okay, thank you so much, Jill. So after I will be show you the ledger after journal entries. So after we post journal entries in ledger step by step on account, we got trial balance after adjustment. So with the company trial balance after adjustment January 31, 2021. Account name first, cash in debit $17,832. Not receivable in debit $1,200. Account receivable in debit $22,950. Allowance for default account in credit $1,377. Interest receivable in debit $8. Inventory in debit $6,300. Supplies in debit $560. Account payable in credit $11,650. Owner's capital in credit $32,730. Sales revenue in credit $29,000. Cost of goods sold in debit $20,300. Supplies expense in debit $840. Bad debt expense $1,027. Service charge fee in debit $30. Other operating expense in debit $3,718. Interest revenue in credit $8. So the result trial balance after adjustment in debit is $74,765, and credit the result is $74,765.
Okay, thank you, Revina. The next paper will be presented by Balqis. Balqis, time is yours.
Okay, the next journal will be explained by me, which is Winter Company's income statement. for the month ended January 31st, 2021. The particulars are: the first one, sales revenue. The amount is on credit $29,000 and cost of goods sold $20,300. Sales revenue will be minus with the cost of goods sold, which result as a gross profit, which is $8,700. And after that, we have the operating expense. First one is supplies expense, $840, and bad debt expense $1,027, service charge fee $30, other operating expense $3,718, and we multiply all of the above, which result a total operating expense. It's $5,615, and after that, the gross profit will be minus with the total operating expense, and it will be $3,085. And after that, we have other revenues and gains. It's interest revenue. It's only $8. And after that, $3,085 will be added with the $8, and it will be the result will be net income $3,093. After that, I will be explaining the owner's equity statement for Winter's company for the month ended January 31st, 2021. The particulars are: first one is owner's equity, December 31st, 2020. The amount is $32,030. It will be added with the net income about $3,093. And after that, the result after we added both of the account will be owner's capital for January 31st, 2021, $1,883. After that, we have Winter Company classified balance sheet. It's for the month ended January 31st, 2021. The particulars are: the first one is the assets. We have cash about $17,832, and notes receivable $1,200, and the account receivable about $22,850, and it will be minus with the allowance for doubtful accounts $1,377, and after we minus account receivable with the allowance, it will be $21,573, and after that we have interest receivable for $8, inventory $6,300, and supplies $560. And we'll be adding up all the above for assets, and the total assets will be $47,473. And then we have liabilities and equity. The liabilities will be account payable. It's $11,650, and that's the only liabilities we have. So the total will be $11,650. And the equity, we have owner's equity for January 31st, 2021. It's $35,823. And we will be adding the total liabilities with the equity, and total liabilities and equity will be $47,473.
Okay, thank you, Balqis. That's it, our presentation. Thank you for your attention, and then see you again. Assalamualaikum warahmatullahi wabarakatuh.